Hi everyone, long time no speak. It's Jamie Fleming here, the financial analyst from Teamsters Local 174 in Seattle, and I'm here to address UPS's third quarter earnings report, which just came out the other day. I'm going to assume most of you are already familiar with the financial analysis videos I've put together about UPS already, which I will be referring to in here. If you're not familiar with those, I'd encourage you to check them out. So, the earnings headline results looked fantastic, which you might have seen. UPS earnings per share were up over 20%, beating Wall Street expectations, the headlines screamed. So I expect some of you probably saw that and found yourselves wondering if this means that I was wrong and UPS actually has even more money than we thought. And I'm sorry to break your hearts, but the answer to that question is nope. Despite the strong headlines, the same concerning trends we saw after the second quarter of 2018 have continued. Now, in my first financial analysis video, I showed you a chart like this, which showed UPS domestic packages operating profit margins each year since 2008. I focused on the U.S. domestic package segment because that's where all our UPS package employees work. And you may remember this chart was concerning because we saw operating profit margins decreasing pretty consistently since 2012. So now I will update this chart to include the results from the third quarter. Look closely at the end of that line as I'm about to switch to the new chart right now. Did you see it? Let's look again. Old chart, new chart. Yeah, it didn't really move much. How come? Well, because while UPS domestic package segment revenues increased by 8.2% in the quarter, operating profits actually fell by 16.4%. And U.S. domestic package operating margins tumbled from 12.25% to 9.47%. Ouch. In the finance video, I also showed you this chart, which had hard numbers for quarterly operating profit from the UPS domestic package segment starting in the third quarter of 2013. I have also updated this chart to include the most recent quarterly results, and it looks like this now. When I connect the third quarter of 17 with 18, you can see how it decreased. Oh, and by the way, while we're on the subject of quarterly operating profit, here's FedEx Ground, who also reported earnings since my original videos. FedEx Ground operating profits increased over 10% in their most recent quarter, compared to UPS domestic package, down 16.4%. So that trend hasn't changed either. Anyway, there's one more pair of charts I want to show you real quick. In the finance video, I showed you stock prices, comparing UPS, FedEx, and the S&P 500, which is a proxy for the entire U.S. stock market. The chart I showed you covered 5 years. I pulled the data again to update this chart, and it now looks like this. So, you can see that the stock market in this country took a dive in the past month, which means the return rates have dropped for pretty much every stock. But the trends remain exactly the same as they were before this quarterly result. So, if U.S. domestic package performed so poorly and profits were actually down, then where the heck did that 20% earnings growth come from? And that's a great question. Operating profit wasn't just down in the U.S. domestic package division, it was down through the entire company. Operating profit, by the way, is the profit they make from the operation itself, so it doesn't include things like taxes, depreciation, stuff like that. Operating profit was down, but net income was up, because income taxes were 44% lower in the third quarter of 2018 versus the third quarter of 2017. $299 million less in taxes. So that's where it came from. Income taxes. Great job, UPS. I hope this has helped you out, and I'm happy to answer questions via email. Thanks, everyone.